If you've started a business and you think you need to go get an LLC for tax purposes, you're probably wrong. Hi, my name is Allison, and I'm a CPA with about 20 years of experience working with small business owners. I get this question a lot. I get a lot of people who are really excited to go and start their businesses, and in their minds, the first thing that needs to happen is that LLC. I need to create an entity that's going to go around my business for tax purposes, right? No. If you are the only owner of your LLC, the IRS actually says you are a disregarded entity for tax purposes, meaning that while you have gone to the state and bought some liability protection in the form of an LLC, for tax purposes, nothing's changed. You're still going to file on a Schedule C. You're still going to be subject to self-employment taxes. But great, now you have liability protection. So it's just important to clarify what you're actually doing when you go get an LLC if you are the only owner. In contrast, if you have you started an LLC with your brother, you have 3 or 4 different owners, now you have a partnership. You have an LLC that is taxed as a partnership. And that is different. A lot of times what people don't appreciate about going to the state and getting an LLC is that now they have additional compliance requirements. As I've said before, I'm a California CPA. And so in California, if you have one of these single member LLCs, you now have an additional tax return that needs to be filed with the state. You would file your Schedule C with on your federal tax return, and then you would add this 568 form to report your income and expenses related to your LLC. Pay the annual fee, and LLCs in California actually have a gross receipts fee. And these are really for the privilege of doing business in California. They don't really have anything to do with tax savings, other than now you are spending more money, so you have more tax deductions. If you're looking for some privacy protection and don't want to use your Social Security number on everything, and you think you need to have a business entity to do that, that's not the case. You can go to the IRS and you can request a federal tax ID number, an FEIN, and use that in lieu of your Social Security number. And that essentially ties you to your business without having to share that personal information. This is great for 1099 reporting, or if you need to go get a bank account. You could go to your local county and probably register as a DBA, doing business as, or get a fictitious business name. And this will allow you, between those two things, to create some separation between you and the business without incurring the additional cost of having an LLC. Now, if liability protection is important to you, say you are an accountant, or you are a contractor, or you are in some kind of industry where there is potential for risk, lawsuits, things like this, maybe the liability protection absolutely has value. And you just need to ask yourself, am I willing to pay, X dollars a year for this entity that's going to give me that liability protection, so that if something does happen, my liability is only limited to the assets inside that business entity, not my personal. Nobody's coming after my home. Anyhow, hope this helps. It's really common that people think this. If you are looking for strategies around entity structure that do have different tax impacts, I'd be happy to talk about those. Then we'd really get into C corporations and S corporations. Let me know if you're curious in the comments down below. I'd be happy to talk about that.